20 after 12 today, and we are live from the FEG main chat, and we're broadcasting as well live on X and YouTube. So hopefully you're going to catch us either live or recorded, and make sure that you get these sessions in. Today we have a special guest, however. I want to thank the people at FEG Token and BYDFi Exchange for supporting Blunhouse TA and allowing us to do these sessions. And you know, one of the little added bonuses is that we get to bring in some high quality guests, and today is not any exception at all. And I'm kind of happy to have David Nicoski with us today. David has a long history in financial markets, and David is a certified market technician. So David is the accredited version of the stuff that we talk about in here, and he does it at a very high level. Of course, many of David's clients are institutions, right? They're not, individual people, but they're institutions. And David has a very unique way of looking at the market. And, you hear all the time that you should take your information from smart people. And David, I consider you to be one of those smart people. And your approach to relative strength for me as a trader is something that I personally kind of have absorbed now and use it in my own rationale. But I'm not going to steal your thunder. I'd like to, maybe you can just introduce yourself a little bit and tell everybody where you came from and how you got here. And if you could share with the group at the end of that, how you use relative strength in your analysis, because that's going to be something for this group that might be a little bit different. So over to you, David.
You there, Mark? Sorry about that.
Yeah, no problem.
My screen was going crazy, so it was like flashing at me. And thanks for the great intro. So I've been a market technician for 38 years, worked at one of the larger regional firms, Piper Jaffray, for anyone that has any knowledge about them. But I did it for many years, started my own business in 2005. As Mark alluded to, my clients are 99% institutional, and the other 1% are more of the guys on the institutional side that retired. So I really don't do a lot of retail. My expertise is in relative strength, looking for groups, industries that are outperforming and trend following by nature, but looking for those larger inflections. So it's it always keeps you on your toes, I will say. I spend less time about, we've had, 8 up days. What percentage in history have we had that? And, I just look at relative strength. I really prefer to stick to the charts where relative strength is starting to outperform. It leads you into the right direction. So that's kind of the basis. We have a proprietary product that we developed that breaks down the U.S. market into 13 sectors. We had we have a transportation sector, whereas your S&P indexes put it into the manufacturing sector. We had a services sector long before anyone talked about services. This could be waste management companies, for instance, payroll processors. They're really not IT companies. So we break our groups down into more finite structure than what the market does as a whole. We don't look at chicks codes. We actually go through and see who the company's names as their competitors, that type of thing. So we have our recreational vehicle group, which would have your Winnebagos, Thor Industries, your Polaris, your Skidoo, your boating companies, right? So that we can see, where the market is gravitating to, or investors. So that's kind of the gist of what we do. I calculate all the groups on a unweighted basis, but I break them out into large cap, mid cap, small cap, and micro cap where you can. I also developed a product that tracks 44 markets from around the world. And it does it in the same manner that we do with US markets, but we do it by a regional basis. So if there's something trending in Asia Pacific, that's I might pick up something there that I don't see in Latin America, for instance.
Mm-hmm.
So it's literally covering probably 95% of the world's market cap through every country. So
So,
uh,
one of the things that I found really interesting. So, as a trader, I often like to think that I'm trading the best asset to trade. When I say the best asset to trade, I mean it in the context of the best possible returning asset to trade. But what I've kind of learned from you is that the way that you use relative strength is that you're basic. Let's say I want to trade banking, just for an example. I might think I'm trading something that's best in class, but what I've learned from you is that there might be something that I haven't heard from in the same sector that's returning twice as much, and I never would have found it any other way. Like, how do people use relative strength when they trade to
yeah,
help them
well,
determine the best direction to take on an asset?
for large fund managers, if we can highlight it, a group that's going up, it's really about, they have to rely on fundamental research. So they'll go through and, like, for instance, if I was highlighting engineering and construction companies,
Mm-hmm.
they'll go through and call the analyst on the sell side that covers all these companies, and they'll say, hey, we really like Sterling Construction, right? STRL, for instance, or HVAC companies. We caught the big moves in LMB, 2.5 years ago. If you pull that chart up, Mark, since you got the system there, but we were calling this out at $6, breaking to a longer term downtrend. And the longer the downtrend being broken, the more important it is. And how do I when I sell technical research, it's very hard to walk into an account and say technical research works, right?
Mm-hmm.
You have to have methodology to the madness, and that is buying groups that are outperforming on a relative strength basis. Significantly adds to your performance. I and Mark and I do talk all the time for those people listening in the room. Okay, so I consider him a very good friend and very, very knowledgeable. So, um, I think when I walk into an account and I have to say, hey, I sell technicals, they're like, why are you different? And that's the biggest hurdle for us to overcome is when you're selling, something like that, you have to have a legitimate reason why your system or methodology makes sense. I don't care if the market goes down 20% or goes up 30%, because relative strength always, always, always finds the leadership. Um, and just to give you an idea, Mark, is there a way I can post these in the room?
Yeah, you should be able to. And King, correct me if I'm wrong, but within the chat part, you should be able to upload an image or whatever. Is that right?
Oh, I can hit this share button, is it?
Um,
Um,
let's see.
Yeah.
Yeah, is that right?
So yeah, sorry, I had to find my mic, but yeah, if you go into the chat, you can definitely
oh,
just
okay.
drop it in there. Yeah.
Gotcha. Okay. So, part of the process of doing this is I have to come up with a reason of why something's outperforming. Can I drop it in there though? Yes. Okay. Here. Um, so for instance, if you hear a lot of technicians talking about buy the new highs. Okay. The chart I put up there is from 1971. This is through 2013. I don't have my updated charts in my system right now, so I can't show you. But if you bought groups, and this is based on groups, right? Because 90% of what a technician does is about getting you into the right area. Okay, so if you look at that absolute highs, this is buying new groups, hitting new 52-week highs and holding for a minimum of 20 weeks. If it hits a new high, you continue to stay in the group. So this is buying and holding 20-week periods of new highs. Okay. So that's what your returns would look like. Okay. So the RSR index is basically the Wilshire 5000. Okay. To give you an idea. Now, if you said, let's go to relative strength highs, right? Because you want to prove that relative strength works. Okay. And the only way to do it is this is the relative strength buying the same methodology, groups hitting 52-week relative strength highs, holding for 20 weeks. So you see the returns went from, what was it, 5,454 to 10,185, right? The index returned the same. The relative strength line down below is your performance versus the index. So when that line's sloping up, you're outperforming. There are years that you do get underperformance. And if you took years, for example, when you got into, 08, 09, you were buying energy stocks and you were holding them for 20 weeks. And that's the only time that you see these significant drawdowns in the portfolio. When it comes to, buying price and relative strength highs. So if they're meeting both criteria, your return is even better. Okay. So, and I know these numbers are significantly higher than where they are now. Okay. So, and you can see that relative strength on the end where it had the, complete meltdown that 1 year. Again, that's a false positive. And that means when that line goes flat, there's no groups in there that are hitting that 52-week price and relative strength highs. And that's the counter where you have to say, if this is happening, I probably should just buy the entire market. If that makes sense. You saw the same thing in the 73, 74 drawdown. And you also saw it in 08, 09. So, two periods of the market that were very significant. Go ahead, Mark.
Is this really a demonstration of how institutions will outperform the market and certainly retail traders? Is this a good example of that kind of thought? Like when I see this, it's like, how does the average Joe stand a chance to outperform that? Right. So
well, it's about breaking the market up into logical groups, right? And I think that's what the market is missing when they look at we'll break healthcare into pharmaceuticals, and then we'll have the life sciences groups. Like you don't have a life science group that you can follow, right? So finding where money flows are going, where their inflections are, it just keeps you on the right side of the market. I've been very bullish, education stocks for the last, 2.5 years. They didn't even flinch in the market drawdown, not at all. I mean, they literally kept hitting new highs while the market was melting down. So it's finding areas that, are safe havens that, a majority of market participants see that education's not going away. Some names in that space are like UTI. I didn't make the symbol, so I apologize. Right? LINC, PRDO. There's a number of them out there, and literally 90% of them just kept going north. Despite NASDAQ falling apart, despite S&P having a 20% drawdown. So, it's finding those areas of strength that, continue to outperform, and you didn't have to do anything. I like markets where I don't have to do anything and I can just stay in them for years. The LMB chart that I mentioned earlier, we were very bullish on engineering and construction.
there you go.
Just what's that?
It's there's the chart.
Yeah. So here's my chart of it, and you don't use Or is that a log chart?
This is, I can make it logarithmic.
Yeah, the longer the chart, the more that you should, in my opinion, that you have, um, log for anything over 2 years is what I would say. This is, and just to give you an idea, this is LMB, the relative strength versus the S&P 500. This is up 2,141% over the S&P 500 in the last 5 years. 2,100. I mean, you're talking about performance that, most people have never heard this name. It's not,
I've never heard
it
of it.
started as a small company, but, it's certainly sizable now. So, but, those are things you don't have to trade every day. You just, if you bought it, breaking the downtrend that you see in that chart there,
Mm-hmm.
you got significant performance. So, any questions, or do you have more questions for me, Mark?
Yeah, first off to the group, like, don't be afraid to ask David anything at all, because you may or may not have heard him in spaces quite often, and it's kind of a privilege to be able to ask him questions directly, because just like Ken Carpathia that we had in a couple weeks ago, David is one of these people that's an actual market participant, right? Like, we don't often have the opportunity to talk to people like this and have their undivided attention. I think what most people are wondering about when it comes to the major markets is, what the heck is going to happen next, right? Which is a loaded question, I know, but I think that's kind of what is on everyone's mind. I think everyone wants to say, or not everyone, but most people just want price to go up all the time, which is fine, but eventually these things do come back to retrace, and sometimes those retracements are somewhat difficult to withstand. And I know in our conversations, when we see price just continuing to go up on really nothing, it's concerning, right? Like, do you share that kind of thought that,
Well,
price?
yeah, I mean, I think we're caught in a dilemma right here, right now, where, bonds are ripping and yields are moving higher, and everyone just wants equities and find a bottom. So, at some point we're going to have to, we're going to have to meet the maker when it comes to this type of behavior. So, I'm bullish until I'm not, and that can be, at not a certain level. It depends on when the last buyer is done. And so, I started the year being a big proponent that the U.S. market was extremely overdone, being pushed up by more of the Mag 7. The areas that I've talked about in spaces, for the last 6 or 8 months was, chemicals are extremely weak. Chemicals go into everything on the face of this planet. Everything that's around you has a chemical component in it, from the varnish on your desk to the plastic in your monitor to, and you saw extreme weakness in the retail side. And when I talk about retail, I'm not referring to Walmart and Costco. Okay.
Mm-hmm.
The average consumer stock, look at XRT, has been straight down. Transports, absolutely abysmal. If you're a believer in the Dow theory, I'm going to say it's certainly telling us something, and something that's not healthy. So when we came into the beginning of the year, we turned bullish on emerging markets. You first had, ETFs like EWG breaking the relative strength downtrend versus the S&P. That was Germany. You saw France, you saw Spain, you saw Italy, and our call was that it's going to come into the emerging markets. Brazil's market, the Bovespa, just hit a new high today, all-time high. Mexico, you saw, some great reversals in there. The weakest areas in the world over the last, even with this rally that you're seeing, the U.S. up until a week ago has been underperforming every single market globally. There is not one, even with countries like Indonesia and Turkey, which devalued their currencies, they were still outperforming up until 2 weeks ago. So, I think money is starting to find places around the world. Nationalism here creates nationalism everywhere, right? Everyone's going to look out for their best interest. And I think that's kind of what you're seeing with the US dollar movement. My view was that we had to break back over 100 to, pull money into this market. Guess what? We did it. You have the dollar weakening today. You have bond yields going up. Things that I don't want to see for a tremendous period of time. No one knows what level they start affecting our market. It'll happen. Trust me, it'll happen. It's just I don't know when, and I'll see it, when I see it.
Yeah.
I got a question for you, David, if you don't
Yes.
mind. Looking at your relative strength portfolio, that photo you put up there, what other tools, I guess, do you use, or is it more of a
Oh,
you really have to wait and see, right? Because you're talking about
yeah.
the yearly highs, right? And it
Well,
looks like those lines are pretty much, kind of the same until you hit about 82, and then you start seeing it, the divergence in the lines there.
yep.
So is it more like how do you get, I guess, keyed into these things
Yeah.
sooner, or is it really not possible? You just kind of got to wait and see how it shakes out, and then
Well,
enter.
so let me characterize it like this. We use several different methodologies. We use relative strength as the primary driver. Okay. We also use a 3 moving average cycle evaluation. So that's taking a 14, 13, and a 26-week moving average. And there's a possibility of 6 different combinations when those cross. We also look at groups above the 200-day. What's being less impacted by the market and drawdowns. So if you always hear technicians talking about about buying things above the 200 days. And, some people will just dismiss it and say, well, prove it, right? Like my database has it. Okay. So if you bought groups above a rising 200-day moving average, your return's 11.32% annualized. Okay. Above a falling is 16.08%. And I see a lot of technicians post, well, the moving average is rolling over. As long as you're above it, that's where you also get your mid-cycle corrections. And that is why you have the 16.08% return, because they're still above it, even though the moving average is falling. The average stock returned 17.15% over that time period from 85 to 2013. But look at the below a rising and below a falling. Like those are pretty big numbers on an annualized basis, right? My clients, I have some hedge fund clients, but most of our accounts are like mutual funds, pension funds, that type of thing, right? So the other one that we use is the triple cycle system. Let me see, my file is not cooperating. 1 second here.
I think
So we use a bunch, like I say, a bunch of different tools. So the other one is, when you're looking at relative strength as well. I'll throw this one up. So we rank every stock 1 to 30. Okay. This is what the returns are if you only bought, and these are, so when something goes from a 5 to a 6, we wait a week for that to do the calculation. In other words, if you could buy everything 1 through 5, and even if you waited until the following week when it turns a 6, so 1 is in essence the top 3.33% of the market. The 26 through 30 is in essence buying like the bottom 17% of the market turns in a negative performance, right? So by buying relative strength, again, when I walk into, a money manager and they say, show me that relative strength works, right? I have to have a system that compiles this information into something that's logical. Okay. So if you could buy, everything 1 through 5 on an annualized basis, there's your returns through the different cohorts.
that's insane.
Okay. If you did a triple cycle indicator, This is another one that we use, and I can show you the returns of this, right? So I do this for each one of our groups, every one of our sectors. So if you put 4 and 13 and 26-week moving average, you have a possibility of 6 different cycles that occur when these lines cross. Okay, that's not undeniable, right? Like you can put those moving averages on a group. My calculations, by the way, are based on groups. So if I get you into the right group, that's half the battle. Okay. But if you took the triple cycle evaluations and I needed a filter, so I have about 450 groups in my product. Okay. These are the returns of each one of those cycles, and it had to have a minimum of 20 groups in it. Okay. So U1 returned, you were invested 20, so 26.11% of the time did you have 20 or more groups in a U1. Does that make sense? 22%, 22.15% of the time you had U2s, but I needed a minimum of 20 groups. U3s, 86% of the time I had 20 more or more groups of U3s, and look at the returns. The market returned 602.44 over that time period. D1, D2, D3, all were negative returns. Okay, so you're playing probabilities, right? And that's what I would highlight is it's all in essence probabilities. So if I took it another step and said what were the annualized returns during that time period, this is what the annualized returns would be from a U1, U2, U3, just the market, and a D1, D2, D3. Now, what I didn't do in that chart is adjust for the time period. In other words, U1, you only have it 26.11% of the time. Guess what? We've been getting in the market for the last, few weeks, right? You're getting a lot more U1s. So if I adjusted it for that holding period of 26.11%, okay, this is what the returns actually are based on that period of time. So in other words, if you were making that type of return in U1s and you got, for only 26% of the time, that's like getting an annualized return of 16%. Okay. U2s, 32.15%.
What was the percentage of time on the U2s? What was that?
U2 was 22.15% of the time. So if you weren't paying attention, I always tell people, you know what, you make 80% of your money 20% of the time.
Yeah.
Right?
Yep.
So in essence, if you scrolled up and looked at U2s, in reality, it's only a 6.37% annualized, but you're only invested 22.15% of the time. Right?
Mm-hmm.
So almost 78% of the time, you don't have 20 or more groups in a U2. So in the last few weeks, that would have exploded, right?
Wow.
And if you miss that period of time, in essence, your opportunity cost loss is not making 32.15%.
Mm-hmm.
I'm sure everybody's thinking, what are the U1s you're talking about that are happening that you're seeing over the last couple of weeks? But is this nomenclature, is this just ambiguous, or is there some reasoning behind the U1 and U2?
It's absolutely ambiguous. It's just 3 moving averages put onto a group chart.
Okay, gotcha.
Right.
Guys, sorry to interrupt. Just briefly, are we looking at something David is sharing, or are we looking at XLV chart?
Yeah,
Is that
David,
Blunt's chart?
Yeah, David has shared something in the chat, which
Oh, I see, but not on Telegram or YouTube.
It's not.
Yeah, I'm not on the Axis, so I'm posting it in the
All right,
chat.
all right.
That's just one of the
All right, thank you.
limitations of our technology and doing it this way. But
Yeah.
I did bring up the XLM, which is the healthcare ETF, and I brought up the monthly for it, and then you can look at it in the chat. And
Yeah.
I know a monthly is certainly a long-term chart, but what do we know about how we track and trap price? Right? What did we know up here at the upper value range, and we got a sell signal at the upper value range on a monthly chart? It means get out, is what it means.
Yeah.
And there you go.
So for instance, I just shared a screen of our database of what the best groups are and what the worst groups are as of last week. So everything on the left, you probably don't even have a drawdown in, but you had a huge drawdown in the market, right?
Isn't
And
that
you can see
something?
the
Wow.
you can see the education stocks, in there. Um, Utilities, hypermarkets and super centers, telecom services, UK, Asia Pacific, and US large cap. So I can break it down into just looking at a particular. Here, I'll go like this. So
And for those of you that are listening and watching on YouTube and X, is all you have to do is just get into the FEG chat, and the link to the FEG chat is in our announcements that go out, and just jump in, and you can catch all these charts that unfortunately I can't stream today, but yeah, just jump in the FEG chat and it's all there for you.
Yep. So these are the dates at the top, and then it tells you the triple cycle, how long it's been in that particular cycle. So if you clicked on that chart and blew it up, you'd be able to see what I'm saying.
Mm-hmm.
Where How long it's been in that triple cycle, where it is in relation to the 50-day, the 200-day, and what the MACD is. Okay. And if it's green, those are the dates. So those are weekly dates. You're reading it from left to right. So the most current date is that far left column. So this kind of tells you where to stay out of in the market, right? And you can see something transition from green to red or red to green.
Mm-hmm.
And that way you're catching money flows, and it's all relative to everything in the market. So it's literally saying, hey, money is moving into this segment. And you can see, for instance, the education stocks are have been showing strength the entire time.
And this is why, like David said earlier, we talk all the time, and David's familiar with how I look at a chart as well. But I like that I can actually use David's information in my charting, right, in my own analysis, so that when I am charting, I'm charting something that has the best probability of breaking out. Because again, we have one job, right? That's monetize the chart. And David gives, through his type of analysis, gives me more ammunition for what I do, right? Like, we've seen price do crazy things. Like this is still XLV, it's a monthly chart, right? But when you get a sell signal at the upper value range on a long-term time frame with a giant gap beneath it, what do we know? Well, we know that we are trading above the 20, the 50, the 200, and at some point in time we're going to have to come back and start tagging them, right? That's the easy trade. The really good trade is when you tag them and break them, right? Because we know that we break one level, we find the next. So we got our sell signal at a top. Lo and behold, what do? We come back to the 20, get a little support, doesn't hold. Like we talk about this all the time. And where do you come back to? The 50. It's a logical target. And we would have seen the point of control for the volume profile, which is a big shelf, which is where price likes to come back to and take a rest. If it does not hold, where do you think this thing's going? We broke the 20, we broke one level, we found the next. We broke this level, we found the next. Now that we've broken this level, assuming that we close down here, where's the next? It's way down here. Now is price going to drop right to $80? No. Time and price will come together over time, but this big gap, you lose this shelf and you fall into this gap. You start looking to the left to see where price has been in order to figure out where it may want to go. And this is like the Pac-Man mouth, isn't it? So fall into that gap and that's a problem. And yeah, 20, 50, 200. Like all the stuff that David's talking about are things that we talk about in here too. Right? Which is important because you guys need to know that what we're talking about is being looked at and used by other people that really are professionals. Like if you're ever listening to David and he says a symbol or a ticker and gives any sort of indication that he probably doesn't hate it, do your own due diligence on it. Right? I know I do. So.
No, yeah, definitely. I did want to see David on your, just because I'm a curious guy, on your Navigator best and worst group, your columns here. I'm just trying to decipher your second column.
Those are the worst groups. Those are the D2s, D3s, right? So
on the left side of it, yeah, on the left
side is U2s and U3s.
Yeah, and then you see that column. I see U3, and then to the right of it, there's a 2, and then there's AR. I'm just trying to see, what does the 2 mean, and what does the AR mean?
Yeah, so it's been in a U3 cycle for 2 weeks.
Oh, okay.
Right, which is that 413 26-week moving average. So if you scrolled up and saw where, the 4 is breaking above the 13, right, that's a U1. If the 13 is, I'd have to go look. God, don't confuse me like that. I'm just kidding. Then when you get to the 200 day, it's above a rising or above a falling, right? And whereas the right column is below a falling or below a rising, right? But you want whatever group you are looking at, you're just increasing. All you're doing is playing probability, right? I showed the statistics that shows that you're better off doing that. It doesn't mean you won't make money the other way, right? Catching something at a low, but do you want to be catching, I played a lot of golf. I've never gotten a hole in one on a par 4 course. All right. You can do it. It's just, you're not going to do it very often. Right. And then those are the dates above. So that's May 2nd, April 25th, April 18th. But you know what, if you don't, my clients pay me, if we have a 25% drawdown, they pay me to have them lose 5%, right? Instead of 20, right? Because they have to be invested, right? So using relative strength keeps you in the stronger areas and avoids significant drawdowns.
David used the word probability, right? And when we do these streams, we talk about it all the time. We want to give you the tools to increase the probability of making a safe, profitable trade. Dave's not looking at the market any differently in that respect than we do. Right? What can we do to give ourselves the best chance, the highest probability of making a safe, profitable trade? And we all have different ways to, analyze the market. And somehow, through all of our different methodologies, we often end up through completely different means in the same place.
Yep.
Which I always find fascinating, right?
Well, using relative strength, it's like, okay, if the market goes up 20% and you own the things with the highest relative strength, that means you should be up more than 20%, right? If the market goes down 20% and you're buying strong relative strength, the strong relative strength, even though it might be ranked in the top 3.33%, if you have a 20% drawdown, it may be that you're only down 5%, right? But it's still a strong relative strength. So relative strength just helps you prevent big drawdowns, or it helps capture areas. So for instance, we turned bullish on fertilizers, and Mark knows this, well over a month ago. So your Mosaic, your IPI, Nutrien, ICL has been the standout in the group, and that diverged from the rest of them for quite some time. So, if you went through those ticker symbols, you'd be like, oh, shit, yeah, I see what he's saying, using Mark's methodology, right? So, those are things that, like, we agree on. Like, he can see what's breaking out and what's inflecting, and where volume shelves are on it. So we often come to the same conclusion. We don't agree on everything, but that's okay. That's what makes a market. There's no one standing tool that works on everything. Okay.
Like, if we look at on your screen, you're going to see the Bitcoin chart, right? And Bitcoin is something that, with Dave's background being primarily institutional, based around, stocks, bonds, commodities, crypto is something that isn't necessarily something he's familiar with, just like it wasn't for me at one time either. It was completely foreign. And it does take, I find charting, David, a little bit like, the glove that fits. Sometimes it just takes a little bit of getting used to the new shoes or the new glove, right, in order to get comfortable with something. But, one of the things that we talk about in here all the time is Bitcoin. And I think we do a pretty good job of just following what the market is telling us, right? We talked weeks ago about what would happen when price got to the 50. Expect a bit of a pause. We got that. But while we got our pause, the divergence between these two levels that we talk about all the time, the T-line and the 5 EMA, was still diverged, telling us that the market was still bullish, right? Did the chart lie to us? No, it didn't, right? And when we were at this daily candle, that was testing the 200, just like we said, we have to wait and see what happens to the 50. Rewind play at the 200. Was our divergence still intact between those two levels, telling us that we were still in an uptrend? Yes. What did we think price was looking for? The point of control. What did price find? The point of control. At no time, even through the sideways price action, is all you did was go sideways back to these levels and then up you go. As long as the divergence is intact, you still have more upside. Did we break? No. What was our next target? The upper value range of the point of control. What have we found? The upper value range of the point of control. We don't need crystal balls, because we just do what we're told. That's all we're doing. We're doing what we're told. The chart tells us, this is a real good example. You had a nice downtrend here, but was it invalidated down here? Yeah. David talks all the time about what happens when you break trends, right? Well, did we break this trend? Yeah. Our signal told us that we were good. The fact that we were getting a signal while breaking trend, that's even better. But it's all we were doing is doing what we're told. And when it looks like we can't find a target on one time frame, then we start looking back and forward on others until we find them, or giving us something to look at. What do we think's happening up here? Well, we know we have all-time highs. So we have to be kind of conscious and aware that at all-time highs on a weekly chart, trading well above the 20, the 50, and the 200, with these volume gaps, and by the way, these gray bands, we know it represents lighter than normal trading, but already have big gaps in them. So and where did these gaps come from? These parabolic candles here and these parabolic candles here, because they're filled with fairy dust and air. And when they come back to be retested, they drop like this, or they go up like that. Why? Because price is lazy. It's going to take the path of least resistance, and that's what these volume gaps represent. The path of least resistance, right? It's not any surprise that we jump up into that volume gap with velocity like we did here. But
yeah, I threw up a chart of Bitcoin versus the S&P 500 because that's the period of which I marked on the chart where I would draw the trend lines, right? Nice. Of where your entries are. So just to give you an idea, when you break a downtrend, it goes up. When you break an uptrend, it goes down, right? Mm-hmm. So there's just a little, different without the volume shelf that, Mark uses, but it's the same philosophy.
Yeah. And actually the chart you're showing is this right here, I take it. that I'm showing?
It's going back 1 year. So
is
your
it?
chart doesn't go back quite 1 year. There. Yep. So I'm catching the downtrend, and it's probably, that second hump. Again, I just pulled up a 1 year chart.
Mm-hmm.
So we would have come to the same conclusion.
Yeah. Like, this is the kind of stuff too that, as a trader, I know I struggle with every single day. Like, let's just use this daily chart of Bitcoin, and I know what the chart is telling me, right? Like, it's my system that I'm trading off of. I know what it's telling me. It's telling me price is going higher, and it has been for a while, level by level. Break one level, find the next. Current price revisits past. But what I struggle with is the thinking part of when the darn thing's going to change direction. That was always the kind of stuff that would keep me up at night, for whatever reason. But is all I do now at this point is, if I'm worried about whether this chart's going to roll over, I just start dropping my time frames, so I can see where the risk is on the chart on those shorter time frames. And it's either going to confirm my uneasiness or invalidate it and make me just continue to follow the chart. But this is why I use this system, is because it just makes me think less, right? I believe that this is a language. It's all based on mathematics, and if we believe mathematics is a language, we have to acknowledge that this is a derivative of that, so it's a language unto itself. And I have to get out of my own head and just do what I'm told. Follow the chart, follow the chart, follow the chart, until you're invalidated. The tools that David uses, I find incredibly valuable, because I want to trade the stuff that has the highest probability of price movement in the direction that I want. I was shamefully unaware, in any forensic way, the value that the type of relative strength analysis can provide a trader. Right? I was very much fixated on the charts, which I want to be, but I didn't understand relative strength in the context that David does. So it's a real privilege for me to be able to actually have him as a friend and to be able to learn from him. So.
And I actually got a question on that, on the relative strength on your triple cycle indicator, David.
Yeah.
So is it purely on those moving averages, and are those moving averages, are they the simple moving averages, or are they?
The triple cycle is strictly moving averages, and the what we did it again calculated on was groups. But when you have 450 groups, and there's actually probably closer to 600 groups, but some just go away, right? Like take video rental, right? When you say there's 44,000 stocks in the market now. There used to be like 6,000, by the way, right? So I have the historical data of like my video rental group, right? But when you're taking, when N is that big of a number, it's not going to deviate, that you would get similar results out of equities, right? But the skewness of the graph would be higher on, the U2 side, and it would be the returns on the D2s and D3s would be more negative, right? Because you're doing it on groups. Stocks can go to zeros. Groups don't always go to zero. Does that make sense? So the skewness would actually change in that graphical illustration, that U2s and U3s would be a much greater percentage return. D2s and D3s would be a greater loss. And those are strictly 3 moving averages put onto group charts, right? So if you could do this with all the ETFs out there, which I do, okay, so I have an ETF product as well that highlights all of the, and I've calculated the returns on that as well. But we have an ETF product as well. So if I pulled that up, and I break it down into thematic, alpha, convertible preferreds, consumer staples, communications, energy master limited partnership, ETFs, financials, technology, real estate, manufacturing, utilities, thematic, multi-factor, dividend. And which one of the things that stands out, like even when you're looking at this, again, going, with that theme of like what I said, that, foreign markets had been outperforming the US. Like, look at this graph. Okay. Like if you look at those are sorted by market cap order. So the MSCI EFA value fund, it had a 1 on it, right? And those are again, weekly going back in time, starting with May 2nd. That was the hottest area that you saw significant fund flows out of, the US and going into international. Here's another example of it. Just with the Europe and UK ETFs, right? Like, look at how fast those things went from being 29.30 to going to 1, right? So you can pick it all up pretty easy just looking through these and seeing relative performance.
What would be some stocks that we could look at on a chart that are known right now that are weak relative strength, and could we compare them to some that have stronger ones?
So,
just to give an idea of how that looks.
Yeah. Okay. So as I mentioned earlier, the chemical stocks have been very weak, right? There's the relative strength performance of Dow. Dow is one of the largest chemical stocks out there, right? That's the relative strength.
Which looks like the chart, basically.
Yeah, like if you own that and we're trying to bottom fish it, you've been trying to bottom fish that for a long time. It's underperformed the S&P by 55% over the last 52 weeks. So if the S&P is flat, you're down 55%, right?
And here when I look at Dow on the weekly chart, like, this latest, well, you actually kind of topped out up here, like in May of 24. You started to sell, and then again in October 24. But you get your sell signal, and look, does price trade on the north side of these levels? No, it does not. Right? We show this all the time in here: 5-minute charts, daily charts, weekly charts, hourly charts. You get your signal to sell, and you just do what you're told.
Yeah. So there's the absolute price chart as well, not using candles, but using, high-low close, which I tend to use more often. I do look at candles for turning points, right? But if I looked at this chart, it's still in a downtrend. All I know is I got oversold, extended from the downtrend, and yet a bounce. Right now, I don't see any. I like the formation that it has, but I also am reticent that, hey, relative strength is still down. Why do I want it if it's going to underperform? You can make money and underperform.
Exactly.
Right?
Compared to the rest of the sector.
You could come in the room and go, hey, Dave, I made 10% off a Dow stock. And I'd be like, the market's up 20%, right? It's all relative. I don't care what direction the market goes. What I do care is about owning strong relative strength.
This is a move that, just looking at this Dow, like how many times have we seen this, right? Catch a bottom, price starts to move higher, has an allergy to the T line, doesn't matter the time frame, price retraces, takes out the previous wave's low.
Yeah. And you see this all over. Like here's Westlake, okay, another chemical stock, right? So as I'm going WLK, here's the chart of Eastman. So you know what? If I keep my clients out of this, it's like me making them 50%, right? Because they didn't buy it.
Yeah. And I think that's important for the room too, right? Like, sometimes we say the best trades are the ones you don't make. We talk about trying to mitigate the risk. I think this is a great example. Like, you're mitigating risk here by not being there. Quite simply. Another example, right? Big failure at the 20 and 50. That would be a huge thing for me. With that signal and price does not trade on the north side of those levels, and you're still in a downtrend. Break one level, find the next. Break one level, find the next. Did anybody think that this thing was going to find the 500-day moving average on a weekly chart? Probably not. But there it is, having a big party right there, right now.
And these are all the D3s you're putting up here,
Oh yeah.
David.
If
Yeah.
here I'll pull up the chemical stocks and show you, what our rankings are. Okay. So if I had to go to, and I break it down by stock too, right? So this is the chemical stock, or the actual basic materials groups. Okay. So if you look, see MAO6, MAO7, MAO8, MAO9 are all chemical related groups, right? And I can take it a step further and take you right into what's in those particular groups. So give me a second. I have to scroll down 250 pages because that's each one of our systems are roughly 250 pages.
Not too many.
No. So like if you
chemicals, Dave.
What's that?
What's the ETF for chemicals?
I would have to take a look. I don't know what it is off, but this is what our rankings for the individual stocks are. Okay, so if you click on that, you'll see what makes up those groups. So, BASFY, which is an ADR, right? It's German. That's been the strongest performing one.
On the German exchange?
Yeah. Well, BASFY is an ADR. So we have it in our product. So what most people don't realize is the New York Stock Exchange, they'll look at advances and declines. And for instance, it was breaking out, very close to breaking out even 2 weeks ago, right? In the advanced decline. The problem with looking at the NYSE is the NYSE actually has ADRs in it. The S&P 500 does not, right? There's like 250 ADRs out there, right? Like Vodafone,
ADR.
American Depository Receipt. So you can trade like all the Chinese stocks are ADRs, right? That you trade.
So you're not actually owning the stock, you're actually owning something that has an interest in the stock. Is that right?
Exactly. That's correct.
Okay, thank you.
Which comes with a whole other type of risk profile, I'm sure. Right? So this is BASFY weekly on your chart.
Yeah.
And you can see how it's respecting the upper and lower ranges on the volume profile. The value ranges. It's kind of trapped there right now.
Yeah. Here's another example of a group with a lot of ADRs in it. Specialty Chemicals Large Cap. If you blow that up, Linde PLC is a foreign stock. Air Liquid is a foreign stock. Air Products is a local stock. Axo Nobel is a foreign stock. Albemarle, which is also lithium mining, which is considered a chemical, by the way. Most people don't know that. That's a 30. So you have 3 stocks in there that are very strong. They're all foreign equities. The 2 weakest ones are U.S. equities.
Well, there's Lynn's Weekly, and it certainly ran. Showed on a monthly, it's a little bit of noise out, but that's
It's a nice looking chart.
wow.
Any other questions? I'm going to have to run, Mark. So
Yeah, no problem.
Okay.
Yeah, guys, if you have any questions, get them out now for Dave. Bueller, anyone? King's
Is this normal for people to just keep posting stuff in the chat?
Yeah, that's kind of normal. Yeah.
Okay.
Yeah.
Mark, David, I just want to thank you guys for taking the time to share this knowledge. Hopefully, we get to see you again one of these days, David. It's very interesting what you're sharing here. Thank you so much.
Yeah, you're welcome. Well, Blunt is a very good friend of mine, so I'm always willing to take my time out and come in here and chat about like what we're seeing in the market and rotations that are occurring. So more than welcome. I'd love to be back.
You know what would be fun? I think we should do a special session with yourself in Carp.
Yeah, I'd love that.
Right? That'd be fun.
Carp is a good friend of mine too.
Yeah.
So
That would be a blast actually. So.
well, let's do it.
Yeah.
Do it next week.
Yeah,
Just-
I'll mention it to him today.
Very simple question, David. Blunt is a teacher of us here. He uses some of the indicators very fluently and brilliantly. The RSI and the stochastic RSI is one of the indicators we use a lot. I know you talked about the relative strength index or I mean, your way of looking at things. Does that follow a similar formula to the one we kind of use here with the RSI and all that, or is just a similar name?
Don't confuse relative strength with relative strength index. They're two different things. Relative strength is if you could rank all the stocks in the world, by best to worst, right? Over a everyone knows what IBD is, right? Investors Business Daily. They have their relative strength ranking, right? There's this 1 through 99. 99 is their best. 1 is our best. And my father developed this years ago with a guy by the name of Steve Luthold, way back in the 70s, well before IBD ever it was a thing. I mean, long before IBD was ever thought up. So it's something that, I've used for, and it's the only thing that I can honestly say without a doubt. Like if you could tell me what the returns are on any other technical indicator, I would love to hear it. Okay. It doesn't mean you don't get a good trade out of them, right? RSI is telling you where the stock is in relationship to the previous 14 periods, right? That's essentially what RSI is. It's great for trading. And that's what you guys do. My clients are not traders, right? They want to buy something and hold it for 3 years if they can. Relative strength is the one thing that will get you there. RSI will help you time getting into those. Does that make sense?
Yes.
So, RSI is great, but is it the tool that I would use for a buy and hold type stock? And my answer would be no. It would be for timing to buy into a stock or when to sell a stock if it's extended. So that's I think the different terminology. And I often get people will say in spaces, RSI doesn't work or technicals don't work. I've read all the white papers. I've never seen someone produce a white paper of RSI, and I have gone back and done like every type of analysis from, the Elliott waves or anything like that. And no one can recreate what those indicators were. And since our product is fluid, and when I mean fluid, we actually have the data in our database. So I can test it. Like, a lot of people will say the 200-day is the best. Well, that's the default on your computer. That's the easiest to test. But when we actually tested, it was 198.6 days. Okay. But you're like, okay, we're 1.4 days off. Like that's probably not the end of the world, but that is the best period of time, believe it or not, when you back test to 1969 on every company, right? So it's so much easier to say the 200-day than 198.6, right? Because people are going to be like, I got to change my indicator, right? And it's not going to change that much because you're talking about such a large chunk of history. So, we've done everything from buying groups, breaking to 13-week price highs, 13-week relative strength high with a 20-week hold. And the longer the period that it's breaking out of, the bigger the return. So in other words, if I went back and looked at our data, of groups breaking out to a 13-week relative strength high, buying in a 20-week hold, and then a 26-week relative strength high and a buy and a 20-week hold, and a 52-week clearly comes out the winner by far. Why is that? And this goes back to what I said. The longer the trend line that's being broken, the more important it is. Something breaking a 2-week downtrend is not as important as something breaking a 4-year downtrend, right? That is the essence of buying something hitting a 52-week relative strength high. It's a longer trend line. It's much more significant than something bumping its head out for a 2-week high, right? And, it's about using the other tools from a MACD or to an RSI. I'm going to say I relegate them to timing the entries into the areas with strong relative strength.
Understood.
Okay.
Thank you.
Yeah.
Yeah, explained very, very well. Appreciate that. Clarifying.
Yeah. No, it's like, I don't know everything, right? And I don't know what I don't know. Right. So, every market is different. This market is certainly much different than anything I've been through in my career. There is an essence that it's just buy. We can't go down. I'm going to say I don't think many traders use fundamentals whatsoever. A news story will come out. We have a memorandum of understanding that we're going to do business with, Smart Modular Reactor SMR company, right? And the stock goes up 30%, but you don't know any detail, right? Like even before this market took off, over the weekend, I'm like, okay, we had 145% tariff. Trump comes out on Friday and says, 80% sounds good, but I'm going to leave it up to Bissent. Well, then we get a 30. Like, I don't know of anyone, any analyst, any strategist, you had every strategist last week calling for a recession, right? 145% is a pretty, 30? Oh, it's a lot better than 80, and it's by far better than 50. So, that's the type of thing that moves a market. Now everyone's moving back and adjusting their numbers, but we honest to God don't have any earnings yet, right? That actually contributes to when these, tariffs were put in place. So, it'll be interesting as we work our way through the timeline. But, right now it's exciting. It's a lot of fun. So just be careful out there. I'm going to say, just have some discipline of taking some profits if you're trading. And, again, if you can understand relative strength, the best way to do it is take a particular stock, divide it by the S&P 500. Everyone's screen will allow you to do that on whatever you work on. And it'll give you an idea that, hey, I'm buying a stock that's underperforming. I can tell you right now, most people like stocks that are outperforming, right? Because if the market goes up 5% and you're up 3%, you should have just bought the market, So that's the way I would paraphrase it. So I appreciate your time, everyone. Thanks for tuning in and listening. Thank you, Blunt. I appreciate it, buddy.
Well, thanks so much, David, and we'll get you in here with Carp, and that will be a session to remember, I'm sure. Thanks again for coming in.
Yeah, thank you.
Okay, cheers. Take care. Well, that was a real privilege for us to have David in here to talk to us about, how he looks at markets, which is going to be a very different way than what most of us have been traditionally exposed to, right? And I think it's healthy for everyone to get a different perspective from time to time on how they view the market. But I think one of the takeaways that I always have when I talk to David, and maybe you took some of them yourself, is that a lot of the things he says or talks about are stuff that we talk about in here as well, right? Be careful, mitigate the risk, increase the probability of trying to make, that safe, profitable trade. And I think when you combine all of the good methodologies that are available to you, it can become a real powerful combination. So I listen very carefully when, David talks about, whether it be a stock or whatever it is he's looking at, that looks like it's kind of on the verge of a relative strength breakout of significance. And then from there, I can use my methodology to try and kind of get an idea of where the thing's going. Just like, this is this breakout here, as it started, we talked about where it potentially was to go step by step. And lo and behold, here we are. Right? So when I say that anybody can do this, it's not just for the sake of the words. It's because anybody can do this. It just takes time. Just take a little repetition, a little discipline, right? Mitigate your risk, take your profits when they're available, because that's the only way you're going to build wealth, right? You're not going to build wealth swinging for the fence all the time. You're going to build wealth taking those reasonable profits as they're available to you, reducing risk at the right time. Right? Those are the things that will help you build the wealth. Right? The trading can help, provide you with the means to do it, assuming that you're profitable. But you have to be able, it's not necessarily what you make, it's what you keep. And at the end of the day, we want you to keep more than you put in and more than obviously you lose. Right? That's the point. And I think everybody in this room does, that comes into these streams, I think does a great job of making the effort to do it. And, it's kind of a side story. The other day I was, a little personal conversation with somebody, and, they were talking about how their kids feel that they're really hard done by. The world's just a terrible place. It's just not fair, and so on and so on and so on. And I can't get this and I can't get that, and everybody else has this and everybody else is doing this, but blah, 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 blah. And it just kind of brought me back to some of the stuff that we talk about in here sometimes. Put your friggin' big boy pants on. What have you done to change the state that you're in? You don't like not having enough cash? Fine, do something about it. This is an option. Learn how to read price on a chart. It's not a joke. Whether it be a little bit extra money or you want to do it full time. Invest the time to learn. Look at it like you're professional, and you're probably going to be okay. Anybody really can do this. They really can. Don't let your ego get in the way and try and predict where price is going and front running charts. That's not what this is about. Not for me. It's about following what I know provides results. It's about doing what I'm told when I'm told to do it. It's about keeping my bias, and everybody has it, out of their trade. You got to determine what you want to listen to. What people are saying or what money is doing. I choose to listen to what money is doing. I hope you do too. And what does that mean? Well, that means not listening to all the BS in the world about why the things we love are going to go to crazy valuations. Maybe they will, maybe they won't. But it's all that matters is what money is doing. And we talk down here, we paid the insurance, you get your signal. Are you worried now if you bought down here that are you even thinking about the insurance that you paid down here to make sure you made a safe trade? No, you don't care anymore, oddly enough. Because all you're doing is telling your family and friends how you bought at somewhere around 81 and price is now 103 and you're a pretty smart person. That's all that's in your head. You don't think about the insurance. At the end of the day, the chart will tell you. It just does. And if you can't figure it out, if it looks like you can't make sense of it anymore, change your time frames. Take your candles off the chart. We talk about that all the time, right? Is all I know is that as long as I have that divergence there, I'm okay. That's all I need to know. Did we talk about price reaching the 50? Yep. Is it a target? Did we talk about what would happen when we got to the 200? Yep. Did we talk about the point of control? Yep. Did we talk about the upper value range? Yes. And how price would move through the gaps? What would happen when it hit the shelf? We talk about it every week so that you guys can take it away and monetize the chart. And it doesn't matter what the asset is, what the time frame is, or what the market is. Price will behave the same way each and every time, all the time. Doesn't matter what it is. Stocks, commodities, crypto, it's all the same. Nice buy signal. You get up there where there's some major moving averages. You got the 50 and the 500 in here. Obviously, you're going to take a little bit of a pause. I love this. Right. Second mouse, right? This was the first mouse, got the squeeze. The second mouse, big bounce off the 50 and 20-day moving average. And bam. Right? Do I know much about Litecoin? Nope. Am I going to go read the Litecoin white paper? Probably not. But I'm going to trade the chart. That's all I care about. Monetizing the chart. Right? We like to buy off major moving averages. The 50 and the 20 is one we've talked about before. They always give you nice solid moves. And did our other indicators tell us that maybe it wanted to move higher? Yeah, it did. And now you have targets, right? You know that if you can get through this and you get up into this, you can break through that volume gap, the point of control is obviously a target. And so on and so on. Do you guys have any other symbols you want to look at? We haven't done that yet, so we can do that quick. There's always someone who's got a few. So.
I don't at the moment. I got to jump out blunt, but always grateful for your knowledge, man.
Hey, listen, you bet, my friend. Let's talk soon, okay?
Yeah, absolutely.
Okay. Magic Mike is
Blunt,
in here. I can't believe he doesn't have a song. Who?
Would you be able to look at Solana real quick?
Of course.
I like trading Solana, man.
There we go. So here's the daily. Let's put it. There it is. Volume profile. So on the daily, you got support at the 20, gave you a buy signal. So this is kind of a continuation move, right? So this was your downtrend. Now it's invalidated down here. First move up, pull back, second move up. This looks like, you got a continuation off the 20 days, so you could get a little bit of resistance at the 200. That would be expected, right? If it does fail, it's going to come back to this neighborhood in here, right? Because that's within this gap. You got some major moving averages. That makes sense. What price might want to come back if it fails. If it breaks the 200, just like we looked at on Litecoin, you have to start to look at the point of control as a target. But it's got to get through the 200 first, right? If this is a failure of the 200, well, not necessarily a good sign, right? But again, you just come back and start to check the levels. Right? You fail the 200, you'll probably come back down here to the 20. The 500 happens to be in there as well. You break down that, you'll end up at the 50. Fail one level, find the next. 4 hour. Okay, so we know what this is. The amber is always the 1,000 day, right? So this is 1,000 days on a 4 hour chart. and that's where we're finding our resistance. And if you look to the left, you tagged it here for support, 3 significant times. And now you're testing it as resistance for the first time. If it breaks out on the 4 hour, it's going to have a little bit of room to breathe. If it fails on the 4 hour, well, you come back to the upper value range and the 50-day moving average. However, look at your stochastic RSI, and your Fisher and your MACD are actually quite bullish on this time frame. So this could be an interesting breakout. And if you were on this early, right, knowing that you're testing that average, you're probably going to be looking over your shoulder, waiting to see if you get a buy signal and hoping to catch the one that's a breakout. Right, so you would see this as resistance, and maybe you break out here. But the idea is to get you in earlier on a shorter time frame. But this could be fun to play. It does get, one thing I can say about Solana is it does get decent moves. Like, you'd love to catch this. Look at that on the left, right off the 50. Arrgh.
Yeah, I was in on that.
Oh, this is the one you're telling me about. Oh, okay.
Yeah, and I pretty much traded all the way up, and then when it took that first red sell signal up there, it's pretty much where I think it was the second sell signal. That's where I got liquidated hard, because you see how far it went down, and with a 75x, yeah, that thing went.
Yeah, and that's where the leverage can come back and bite you in the butt, right? But one of the things that you might be able to do and we talked about this before we came on, and maybe we'll talk about it a little bit here. I'm just going to share this a different tab. So this is the BYDFi interface. Okay, this is the Bitcoin chart. One of the things that you can do, and especially if you're using leverage, is layer your stops. Okay, and what I mean by that is I've been using a combination of a hard stop and then a trailer. Right, the trailing stop is the one that kind of moves along with price, assuming that we're longing here on this chart. The trailer, as price moved higher, would follow price, right? And the intention is that it locks in your profits as price moves in the direction that you want it to move in. And then when it retraces back, because remember, the trailer moves in your direction, but it sticks when price pulls back. So on a retracement, it could stop you out on the trailer, which is fine, right? You're locking in your profits. But what you can do on BYDFi is you can run both. Let's just kind of pretend here for a second, all right? Let's just, if we were to buy Bitcoin, okay, and we set, well, I'll set the stop later. So what I would do is when it triggers, let's say I wanted to set this as a stop, right? I'm going to blow this up. So the bottom of this candle and the bottom of this candle, maybe I would use that as a stop area. So what I would do is I would go in and place a stop loss a hard stop at that level, which in this case, I think it says it's 103.7 something. All right. So that's your disaster stop. So you just opened the trade. The last thing you want to happen is to, the thing go totally sideways on you and flush you out or liquidate you, whatever the case is. So you run a real tight stop at the beginning. And quite honestly, if I was to get in, if this was a shorter time frame, right? If I was to get in profit, let's say I bought down here and price moved up, I would actually raise my hard stop up to make sure that my disaster level is actually green. So if anything did happen terrible, I would be stopped out green. But my trailer would continue to run until it actually invalidates your regular stop loss. Right? So if my stop loss was here, my trailer kept moving up, and then got past this level, your regular stop loss is now invalid and you're working off the trailer. And that's going to help you lock in profits. Now you can do this on Blowfin as well. Right? BYDFi and Blowfin allow you to do this. It will always change a little bit, like where you might want to put your trailer based on what you're trading, because the liquidity is a little different. And I sometimes run a trailer on, like ETHFi. If I trade that, my trailer might be 2 or 3%. On Layer, I could run a 2 or 3% trailer and it would be in a totally different neighborhood, right? But that's all because of the liquidity and the lev and all that stuff. So you do have to play around a little bit. But you want to lock in your profits early, or take the smallest loss that you have to take. Right? So if you're not prepared, and listen, we all struggle with this stuff, right? Like if you're not prepared to take a small loss, you're going to take the mother of all losses. Right? That's the tricky part. So make sure you lock in your profits early, and then I set a trailer, and assuming I'm on the right side of the trade, the trailer will follow price, and that is, as soon as price retraces hard, it'll trigger my stop. And that's okay. Like that happened to me yesterday. Set an early hard stop. As soon as it went green, I tucked it inside so that if anything happened terribly, I would get stopped out green or with very, very minimal pain. Trailer eventually invalidated my hard stop because the trade was going in the direction I wanted. And then eventually it did stop me out. But I was okay with that, because it stopped me out in a lot of profit without giving anything away. Right, so give that a try, right? On those, like if you're trading with lev, it's really easy to get underwater fast, right? And the more lev you use, the less time you have to make the decision, right, on what to do and how to do it. So, if you get a chance, do it early. Ed Soikoda, who is one of the people that's considered kind of one of the probably greatest all-time traders, that's one of his sayings, is that if you're not prepared to take a small loss, you will be taking the mother of all losses. And I don't think he's wrong. So give that a try. And if you need some help setting it up, just touch base with me and I'll help you, okay?
Yes, sir. Thank you. Yeah, I think that's what I'm gonna start doing. Trying to have that trailing stop loss, because I could have stopped that liquidation I was gonna see at $89. But I didn't want to lose the $89. I was still praying that it would turn around.
Yeah, I hear you. Yeah. Well, and this is where if we're following the chart, right? And we're doing what we're told, we don't have to think as much, right? We're just going to follow. The chart always tells us, like, look at this daily chart. It never got invalidated, this move up, right? You got close in here of getting a sell signal, but never happened. And price just continued to move higher. What you also could do is drop your time frames a touch, or not your time frames. Yeah, your time frames, just one sec. So the Solana. So what I was getting at is just pay attention to the longer time frames a bit more, because I know what happens to a lot of people is that they're, especially in crypto, you're super focused on the uber small time frames. So, you know, what feels like a bearish move during this candle on the daily chart was really just a red candle in an uptrend, right? Like in here, for example, you don't want to be trying to long these 5 red candles, right? So if you were trading during this period, you'd see these candles on the daily, you know, five red candles, and you're like, okay, maybe I should be shorting, right, and not longing. But I know there's a lot of them that just, they don't even pay attention, right? They just automatically go to the 5-minute chart or the 1-minute chart, and that's all they see. And you really need to understand the greater trend, right? The trend is your friend. So you might as well figure out what it is, so that you know, you're less likely or less probable to make a mistake. You know, this chart actually, the 15-minute is quite clean. Right? You got a lot of support from the 200 on this 15-minute Sol chart. But obviously you're consolidating here. You can't break through. This spits a sell, and then boom, you know, first attempt at the 50 and the 200. What do we know about that? They typically fail. Here's the second attempt. These ones actually break out, and here we go. Current price is looking for past price. Right? Take another look at a different time frame, maybe take some noise out of it. But, you know, this current candle wants to take out this wick in order to take a run at something else. So what is it? Well, it's this stuff up in here. So this price that kind of hits its head on the 50, right? I think that's what it probably wants on the daily. 212-ish, 210, something like that. If it breaks the 200. You know, this Sol chart, this is obviously straight down. You want to know the trend. Always, always, always want to know the trend, right? So, and again, think about using the layered stops. You know, start with a hard one, minimize the risk. It's kind of the disaster stop. I'm putting my trailer in shortly after I open it, so that as price moves from near close to my entry, it's moving from that point as opposed to another level that may or may not already be in profit. But I like to set it at the start and use my hard stop for disaster. So you guys got any other questions today? Or I will of course be drawing two more trading bonuses for BYDFi traders that have signed up under our link. So I'll be doing that today as well, and you'll know you're a winner because you will get an email saying that there is a trading bonus in your account. So kind of keep an eye on that. To sign up is all you do is grab the BYDFi link that is in my profile on YouTube or in our announcement on X, and you can sign up there real quick. But yeah, are there any other questions you guys want to throw at me real quick? I know we kind of dumped a lot on you today.
Can you just go over I just want to know, can you go over the central land for me real quick? Nana?
Mana? Sure. Oops. Decentraland. Wow, you wouldn't even know I changed the chart. It almost looks the same. Yeah, so, here you are testing the 200. My concern might be is that you're overbought on your stochastic RSI, but that can continue. Like you can see in here, you can stay overbought at elevated levels for a significant period of time, but you're certainly running hot. And let's look at the Fisher real quick. The Fisher is still diverged and moving higher on the daily, and you guys know that I really like this indicator because it gives you real clean indications of direction of trend, I guess, because it filters noise. And it's still diverged higher, which is kind of expressing that price is still bullish, and you're still trading above the T line and the 5 EMA. MACD, the moving average and signal line are above zero. When the moving average and signal lines are above zero, it's more bullish than bearish, and there's probably a stronger probability that price will move higher. What you're going to have to do in order to figure this one out is start to drop your time frames a little bit. Right, so here's our 4 hour. This is interesting, right? This thing looks like it actually it's looking more bullish than bearish, certainly the 4 hour. And I would see that, right, maybe you want to take a look at, I know we talked about this last week too, maybe it wants that 38.43 level.
Yes.
Right? What's our 1 hour tell us? So the 1 hour, this current candle looks like it got a little exuberant. What you'd be looking for is that if it does pull back a little bit on this, the current candle anyways, it pulls back to the 5 EMA and or the T line, which happens to be wrapped up with the 50 EMA 1 hour. Right, so that's the level you want to hold on if it does pull a little bit. Right, but you want to make sure.
And what time frame is that?
That's the hourly.
Okay.
Yeah, that's the hourly. But all in all, it's a bullish looking chart for sure. There's the 15 minute. So the little pullback that you're seeing on the 1 hour, here it is on the 15 minute, right? So you can see the divergence, and then you start to roll a little bit. If this candle does roll, I think you look to the 200 and the 20 MA in here, and you see all this. See how it's sitting right on top of price, the 200. Right? So, if this rolls over, look to these levels. When it does roll over, what we're going to see is, do we get support? Right? Is this a move that will be a continuation off the 20 as an example in here, and then price moves up, takes out this high, and then moves up again? Possibly. If it rolls over, you want it to hold this level, because if it doesn't, it'll find the 50, and if it doesn't hold that, well, you're looking down here at the previous wave's low, and so on and so on and so on.
Yeah, and I found that when it's on top of all the moving averages, it's usually, especially if it's coming from support on a higher time frame, I always look at it as it'll find support within those moving averages and keep it pushing.
Yeah,
because it was underneath.
I was going to say, or at least give you another chance to find some support, right?
Mm-hmm.
Yeah. Here's the 5 minute. this doesn't look as bearish, does it, as the as the that 15-minute did?
Especially not after that. Like if you go back on that 5 minute, that you can see this horizontal movement looks more like a correction after you're seeing that, all those green candles to the left. So it looked like it made an impulse, a bullish impulse, and now a lot of this sideways movement looks like it's just a correction before continuing higher.
Yeah, well, we're gonna find out, right? Like, at least, but what you're doing though is you've got a real good handle on where it's been, how it got to where it is now, and based on those things, where it may want to move moving forward, right? Like you look at the chart both from up, down, and sideways point of view, right?
Right.
Yeah, break the 200 here, and it'll be fun watching it attempt to try and take out these levels, right?
That's exactly what I'm hoping for.
Yeah, and hey,
Uh,
you know what? So maybe you get a little resistance at the 200. You pull back to the 20 a little bit, and then get some support and take another run at this level. Like maybe this is the first mouse gets the.
oh yeah,
squeeze. Yeah.
I always expect a reaction at the 200. So I always expect, like if I'm bullish, I always expect it to bounce,
Yeah.
pull it back down before breaking through. That 200 is, I think the 200 is like the mother of moving averages, man. That one always gets a reaction. So and it's stubborn. So I feel like if we get there, it'll react, come down a little bit before making its next push to go back up
Yeah.
and break through.
It feels like it got a little shy when it got to the 200, but it hasn't broken its trend. In the trend, it's still trading above the 5 EMA and the T line without any problems. So
Right.
it's still bullish, right? Quote unquote.
Yep.
Yeah. Anybody else?
No, not today. No questions from Mike
Yep.
today, man.
Oh, okay.
Appreciate it.
Well, listen,
Yeah.
I really do hope you guys enjoyed today's session. Certainly trying. I think it would be a lot of fun to get David Nicoski and Carpathia in here at the same time, because it's like listening to veterans war stories, right? And telling you everything you need to know, not to get killed, right? That's and they both feel the same way. Like, what they liked? They both wanted to come in here because I think they both understand that there's not a lot of freely shared market knowledge, right, that you can get in an intimate setting like this. And they're more than eager to come in and talk to you guys. And I know Ken had a great time, so he was already asking me if he could come back. So I think what we'll do is we'll have those guys come together, and it'll be a real fun show.
Blunt, want to thank you, man, for setting that up, right? Being able to bring in some guys who've been in, bigger positions, right? And show that it's not all, mystic or whatever, right? So it's nice to see that they're in agreement with you and kind of your philosophy and how they might take a different approach, but it all still rings true. So appreciate you pulling them guys in here and letting us ask them questions and pick their brain.
I think it's awesome. So we're gonna keep doing this, and for you guys to get a chance to talk to people like this, and I think it's fantastic. I like it just as much as everybody else. So we're gonna keep doing it. You can support me by finding yourself on BYDFi, or looking at our script that we often have as well, because it does work. And it's one of the things that David and I and some of the other people that we kind of associate with, and Ken being one of them, it's like when someone asks you like that, what does the script say, right? That's meaningful to me, right? Like when Ken says on oil, what does the script say, right? Because he's been there, he knows, right? It works. So keeps us out of trouble, right? Keeps us on the right side of the trade, and keeps us out of our own heads, which is half the battle. So, but I guess we'll call it for today. I really want to thank you guys for coming in and asking David, some meaningful questions. I know he was thrilled to come in and chat with you guys, and hopefully, like to your point, King, you can see that it's not just somebody in a dark room pulling levers, right? Like there's people that are actually doing hard work to try and work in the best interest of their clients, right? And I think you kind of saw that today. So
Definitely.
all right, guys. So keep an eye on your BYDFi accounts. If you're not registered, jump and get yourself signed up. It's a simple email. And again, keep your eye on your email account for whether or not you've won the trading bonus. So
and I highly recommend it. Blowfin or BYDFi. Because it's like I always say, Blunt, it's nice when I wake up to an email and it's like, oh, you've got an extra X amount of dollars to trade. I'm like, yeah, I'll take it. Thank you. And the script.
And you know you're going to turn it into more money. That's the best part, right?
Exactly. I did yesterday.
Awesome. All right, guys. Well, guess what? We'll see you on Thursday. And if you need anything in between now and then, you know how to get me. Take care, everybody.
Take care.
Yes, sir. Take care.
Thank you, Blunt.
Till Thursday.
You're very welcome, guys. Take care.